we bring back those live pictures of Hong Kong Harbor again? You know, what I'm thinking is that it's sort of a pretty good metaphor because you were saying, Sherry, it's a nice day, but take a look at that at the top there. Sort of this dark layer of, I don't know what it is, pollution or coming in from southern China, the factories, I'm not sure. But, you know, this is a good metaphor for what's hanging over markets, right? This tariff war, that 145 number we've been talking about all morning long. You know, it changes by the day. Is it going to be here today, tomorrow, staying forever? Negotiate? Can we negotiate it away? We don't know. Anyway, look, let's bring in Carson Block, CEO at Muddy Waters Research, a longtime bear on China. Carson, good to see you, and a pleasure having you on the show. Your position on China right now, we were talking about this offline a couple of seconds ago, is look, for stocks there, it's a date, maybe a good one, right? But don't rush out and buy a ring yet, is what you're saying.
Well, so I started getting asked about China again after the fall when China announced another stimulus or set of stimulus measures, and you had people like David Tepper crowing publicly about China. And what I said at the time was, okay, if it's a trade, I get it. You think there's some short-term gain, but the risks of being long-term in China equities, I think if you're especially a foreign investor, I think those risks are just not worth it. I've always talked, obviously, about the accounting/fraud issue. You're buying stocks in the U.S. that are China-based. You have the VIE structures. Then we've also had these political risks where we had Xi Jinping go after Alibaba and Jack Ma, and also Didi Chuxing when it was going to list. Then you get the geopolitical risk of China might try to take Taiwan by force or blockade it. And then you have another geopolitical risk of, will the U.S. decide that it's going to delist China-based companies from the U.S. exchanges? So it's a lot of risk. I just don't understand why somebody would really think, hey, from a long-term perspective, this is a great place to be. If you can make money tactically, bless you. But I think it's a tough place to set it and forget it.
No, I hear you, right? And I agree, right? The list of risks is probably as thick as a phone book, right? But, you know, let's talk about China as a trade right now. And, you know, the narrative that we've been hearing is, you know, China's going, look, maybe this is what's needed to sort of kick us in the butt and think about much harder about deploying domestic stimulus to try and help consumption, et cetera. And, you know, the whole China AI boom is going to be helping that along as well, which could mean a lot of upside for domestic onshore shares, A's versus H's in Hong Kong. What do you think?
Look, I'd be out over my skis if I'm talking A shares and H's. I mean, we've always focused on specific companies, you know, sometimes a little bit industries, but, you know, I mean, what's going on right now in the world in terms of the trade war, I don't see how this can be good for really any listed, you know, almost any listed company anywhere, especially in China. You know, I could certainly be missing some things, but it's going to be tough. I mean, maybe the one thing you could say is, from the U.S. side, there's suspicion that the national team has really been working hard to support the share prices of the companies listed in Hong Kong and mainland China. I mean, I don't know how well they're going to be able to support it if it really becomes, you know, an avalanche of selling. But, you know, maybe that's one reason to be not super bearish.
I think that makes sense on a company-specific level, right? I mean, the factors that you laid out, numbers that cannot be trusted or geopolitical risks, which is huge, which I agree, but it happens everywhere. I mean, corporate fraud is everywhere. So I just wonder, isn't it misleading to say it's uninvestable and not really zooming out and, you know, taking consideration of the fact that China did achieve a lot when it comes to some of the strategic sectors?
Well, I mean, misleading might be a misleading word to use for one's opinion, but look, when we're talking about Okay, so one of the things that I always have in mind is how in 2015, the powers that be, they decided they wanted to novate the real estate bubble into an equity bubble, forgetting that a real estate bubble kind of is nicer because you're not marked to market every microsecond that the market's open. And you got the situation where you got a lot of panic selling. And so then the tools for manipulating the market by the government were pretty crude. They locked up people they thought were short selling and, went on meditation retreats. And they basically had the national team come out and, really try to support the market. And it ultimately didn't work. That's not a real market. And that's still, I think, policy. So if you're trying to invest in a market, you first have to ask yourself, okay, is it a functional market? Now, if you're going to be long, maybe you look at that and again say, hey, the bias towards providing some sort of support is a positive thing. Now, when we're getting into the accounting and fraud issues, so from the U.S. perspective, there is no analog to China. Because literally there were hundreds of companies that listed in the U.S. and are acknowledged to have been significant frauds, and only one company chairman ever did any prison time in the U.S., and that's because he was actually from Taiwan. So you have a situation when you're in the U.S. that the U.S. effectively has never had any ability to enforce, never had any way to hold people accountable. Now, is that the case in the A-share market? No, that is not the case in the A-share market. So if you put a gun to my head and said, you have to buy some China stocks, okay, to ameliorate the fraud risk, I would start with the A-share market. We have experienced over the years in Hong Kong, and, Hong Kong, it's almost at times like this, I hate to say it, ongoing joke where you see these companies that plunge like 88% in the first 4 minutes of trading, and that's not that unusual an event. So you do have a situation, and that really became a big factor after the Hong Kong Shanghai Stock Connect opened up. So you started seeing all these mainland flows. So you have had a lot of funky things going on in the market. Now, is that to say that every single company listed in Hong Kong is problematic? No, but if you're being macro and thematic about things, there's just a ton of risk there. I mean, we're very long Vietnam. We have a business where we're long Vietnam, and that I'd kind of looked at that as sort of an anti-China exposure trade. And I mean, that's been basically nuked the past week by the U.S. So I can't really see that, China is a less risky place to be than Vietnamese equities at the moment as a group, given what's going on right now with the trade issues between the U.S. and China, which are far more acute, it seems, than those between the U.S. and Vietnam.
Carson, hold that thought. We've got more ahead with Carson Block in just a few minutes. Stay tuned. You're watching Squawk Box Asia. We're back with Carson Block of Muddy Waters Research. And Carson, I do want to get into India at this point, and quite interesting because you are exploring the idea of a fund which is focused on India, but you're not planning to go activist short selling in that particular market. Why is that? Walk us through your thinking.
Well, the idea with India is really an extension of what we're doing in Vietnam. So it might end up being the same fund or funds that are doing both Vietnam and India. And we're going to be leveraging the infrastructure that we've built in Vietnam to do research in the Indian markets. Now, there's a great economic growth story in India. Okay, I mean, I'm sure everybody's heard it, but what's interesting about India is that their export sector is really based on the export of services. So from a export manufacturing perspective, there is upside there because of the significant investments in infrastructure that the Modi government has made. The digitization of the economy, really bringing a lot of people into the banking system effectively and removing frictions in how money moves, as well as VAT reform, which has made the business environment there a good deal more transparent. So those are all positives. Now, are there companies that in a perfect world we would find and we would short publicly? Yes, but given that for us we're keeping our eye on the prize, which is a long-oriented business in India. It's just not a place that we think where activist short selling would jibe well with a long-oriented business. So yeah, we might run a short book there, but if we do, it's not going to be names that we talk about publicly, and it would probably be largely based on fundamental shorts as opposed to we think there are serious accounting or fraud or governance issues in the company.
So, Carson, since you haven't actually done it, we can kind of talk about this, right? On an if basis, if you were to start a short book on India right now, I would have to guess that, a name like Adani would have to be on that list, no?
The thing with Adani is, it's crazy. You land at the airport, you see the Adani name in Mumbai. You see the building, the office building in BKC where the stock exchange is located, and Adani's name is also on the building. In these countries, political clout accounts for something. So no criticism of Hindenburg Research and Nate Anderson, but that's probably not, especially if you're not going to be activist, that's probably not the kind of person you'd want to short, or the kind of company you'd want to short, where it's so closely tied to somebody who's very tight with the establishment in India. So I don't think that would be at the top of our list. Now, that said, there are various technical factors with trading India, and there's a futures market, and the 223 largest cap companies in India, they have futures traded on them. And from our perspective, we would only short in the futures market. So just because of liquidity and the ability to get margin there. So there's some things that, and this is one set of issues that we have to understand better, because it's not exactly like trading in the U.S. There are very unique aspects to that market. But yes, if we run a short book, it would be Indian large cap shorts.
What about the tax regime in India? Is that something that is consideration for you when you're thinking about this fund?
Yeah, so that becomes an issue for us because a lot of our investors are U.S. non-taxable. So effectively, they don't pay tax in any jurisdiction in which they invest. So if we say to them, well, you're going to have to pay long-term cap gains rate of 20%, then basically the response is, well, then you need to convince us that you can make even more money to neutralize that versus the other investment opportunities we have elsewhere in the world. So there are different structures that some foreign fund managers employ. We're looking at those, but yes, so for a standard U.S. investor who is taxable, that should not be a factor. But again, for our clients who are in university endowments, foundations, et cetera, that could be an issue. And so that's something that we're also trying to figure out.
Carson, get back to Vietnam if we could. And you're saying that, by and large, you prefer Vietnam or Vietnam names to Chinese names. But honestly, is the regulatory environment in Vietnam any more transparent than it is in China?
Well, for me, one of the very high-level issues with investing in China-based stocks, and again, I've looked at this from the perspective of, mainly the perspective of U.S.-listed China names and to a lesser extent Hong Kong-listed. I mean, China, I've felt that for years, and I lived there and did business for a number of years, there was a lot of arrogance in terms of the policy making and hey, you, the rest of the world, need us more than we need you. And you see that every now and then show up when China decides to do something that really hurts foreign investors. It's kind of this cycle, where they'll do something that's really damaging, like they'll take out basically the for-profit education industry, and Xi Jinping does not care that, whatever Tiger Cubs lost money in it. Then a few years later, they feel like they need more foreign investment. So, Xi will come to the U.S. and say, hey, just kidding, and we're not going to take over Taiwan, and you can trust us. I mean, that's a long cycle. Vietnam, there's no way Vietnam could ever be under the illusion that the rest of the world needs Vietnam more than it needs the rest of the world. So I think when you're talking about, just because China is so immense in terms of its economy and Vietnam is not, you're just not going to get that, I think, extreme protectionism of bad corporate behavior, vis-a-vis foreign investors in Vietnam that you get in China. Now, it's also a smaller place. It's easier to do due diligence. But one of the things that also spoke to us early on about why we should be in Vietnam is, we obviously cut our teeth on the short side in China. We learned how to get information. I used to be a lawyer in China. So the Vietnamese government is structured in a way that's very similar to that of China. So all of the techniques that we use or have used in the past in China to get government filings and information on companies, we can employ those on the long side in Vietnam. And yeah, and because you don't have a market where there's been so much foreign capital there just isn't really this big industry in ripping off, foreign investors in the public markets. I mean, there are some companies that are public that we've looked at where we say, okay, there's a delta between what the company says and reality, but we found enough companies that are in very basic industries where it's relatively easy to understand, and you can go and kick the tires, without making appointments to see the factory and confirm that, yeah, the factory is actually humming and the number of trucks coming in and out matches up with what it should based on their financial reports.
And Carson, just for your final thought, as we are wrapping up a very intense week for a lot of people out there in global markets and for the media as well, talking about the policy environment under Xi Jinping, the unpredictability that you were alluding to there, how does the U.S. compare to China in all this? Because many are asking, is something broken for the market, some kind of trust and credibility? Do you have a line on that?
I've got a lot of lines on that. Look, I think what's going on right now on the U.S. side, these are egregious policy errors. And, I've long said that the joke, we used to say in the U.S. that, hey, if we engage with China, China will become more like a Western liberal democracy. It'll be more like the U.S. And really, I think what's happened over time is that the U.S. has become more like China. One of the things that has made China so unpredictable is the fact that, similar to Russia, you have an unchallenged leader who has gotten rid of anybody who would be in the room who would dare to say, you know what, that's not a brilliant idea. Now, you look at the U.S., it kind of appears that we have that same structure, right? I mean, every cabinet meeting, that the current president ever has begins with every single person at the table praising him for, being a genius. And, yeah, I mean, I can't sit here and tell you that that's massively different or better than China. And I feel like that makes this a very dangerous world when we have three nuclear-armed powers that are kind of run by people who don't have a lot of checks and balances around them. So, yeah, I'm really concerned.
Carson, thank you so much for joining us today and for the great conversation. That was, of course, Carson Block of Muddy Waters Research.